words come out of your mouth. Yep. Hey, thanks, Lance. All right, well, we might as well get started. It's been a few minutes. So, guys, thanks for joining us. This is live with Lincoln Select. Again, we are coming from Nebraska Realty, Lincoln Select Real Estate Group down here in Lincoln. We're here every other Thursday, but this week we're kind of gracious enough that Greg Acero's come down to visit us with Fairway Mortgage. So, Greg, let's talk a little bit about you and what do you got going on?
Yeah. Hey, Matt, appreciate it, man. Love to join this. This is awesome. A little bit about me. Again, Greg Acero with Fairway Mortgage. Been in the business 15 years now. All just residential lending within Omaha, Nebraska. Reside in Omaha. Take care of pretty much all of Nebraska and Iowa. A little bit about Fairway is, Fairway's a unique place, a place I really enjoy working for because they are not only one of the biggest lenders in the country, up there with the Quicken loans and stuff, but they are extremely flexible. They offer all the products and programs that anybody needs to get them to home. And from an underwriting standpoint, I just feel like they really stand out. They know how to work with a client to get them in position to buy a house. Fairway offers extremely competitive rates. We have all the programs that are even kind of the non-conforming beyond the conventional, the FHA stuff, which is cool. So you can see, we have a ton of flexibility with getting people the right home loan at the competitive, price, what it needs to be. With my experience and my team, we got a big team, as you know, and that allows us to really treat every client like they're our only client, and you got multiple people working for them. Allows us to work fast, efficient, and we got a lot of experience in our branch. That allows us to just get things done that most lenders are just not able to get done or takes them too long to figure out, and we can move pretty quickly. Yeah. So very versatile when it comes to lending.
Yeah, that versatility and that flexibility definitely come into play a ton.
Yeah.
You guys have always like fun packages you can put together for people. You guys are always telling us about like paycheck stuff. Like you don't even need tax returns sometimes depending on what's going on.
Yeah.
Non-verified income potentially, those types of things.
Yeah, we got a bank statement loan right now that really has exploded. That a lot of mainly self-employed. Everybody does their taxes where they're trying to show as little income as possible. Mm-hmm. We get it. At the end of the day, though, their business makes a lot of revenue. Well, the bank statements show all this money coming in. Taxes don't. We have a bank statement program that we can go off of a one-year history or 2-year history off the deposits, use that for income. It's getting people houses where most banks are saying, like, based on your taxes, we can't do that. Well, we got a program that can really help them out. And over the last 2 months, as I've been pushing this more, seeing a lot of people on the self-employed side come over to us because they got the deposits, don't got the taxes to show for it.
And that comes up. We do a lot of work with local businesses, just with our Homegrown brand. If you guys haven't checked it out, homegrown.lincoln on Instagram and Facebook. But we talk with business owners all the time, and that's always kind of a concern of theirs. Like, hey, I'd like to buy a house, but, I do my taxes in a way that I'm not paying, all of this money out at the end of the year, and so they don't show as much income. They can't get to the house that they really can't afford.
Right, exactly.
Type of thing. So that's awesome. You guys have anything? I know, Lincoln, I think the number one occupation, is probably in medical, like a lot of communities with doctors, nurses, those types of things. Anything for them?
Yeah, so we got a physician loan that we can go down as low as 3%. And real flexibility on the student loans, which is we always see when they're in residency or going through that ladder to get to full on MD or whatever it may be. Low down payment options, no mortgage insurance, a real good flexibility on student loans. How we look at them. So those are usually doctor specific type of loans. We have some unique loans that allow us to do low down payments, like the typical NIFA, which can fit within those parameters for like a resident as well.
So tell us more about NIFA. What does that mean?
NIFA. So NIFA stands for Nebraska Investment Finance Authority. It's a state bonded fund that allows for buyers to come in that may not have enough money for down payment, meet a certain income qualification, have the credit, again, just don't have enough money. Nebraska, the NIFA program will allow them to come in and borrow the down payment, essentially come with just $1,000 to the table and get into a house.
Nice. So it sounds like you have everything covered from doctors all the way down to maybe those first-time home buyers that just aren't in a position where they can throw out $10,000 or $15,000 for a down payment.
Yeah, we got pretty much every loan out there, I can tell you. And a new one that just rolled out that I've been pushing on Facebook is we now have a 3% jumbo with no mortgage insurance up to $850,000.
Wow. Okay.
That's
so
really aggressive.
Covered. Yeah.
Everybody's covered.
Holy smokes. I would say that, in Lincoln specifically, probably 98% of the homes are under $850,000. So you've got it all covered.
Got it all covered.
That's awesome. Well, I've been seeing tons of stuff with rates come out. I mean, rates have... A year ago today, we were being told, at that time they were like floating at 4.5. We were told expect 5.5 by this time.
Yeah.
And they're sub 4 again, and they've been sub 4 for a few months. So what do we see with that?
Yeah, I mean, rates continue to go down. Right now, we're seeing pretty much 30-year rates in the upper threes, which is great. It makes a great opportunity to not only buy a home, but even think about maybe upgrading. I think the biggest thing I saw over the last few years is people got in with really cheap rates, and they're like, man, I do want to upgrade, but I don't want to upgrade because I don't want to lose this great deal. And I think now we're positioning in the market to allow them to upgrade and not have too much payment shock and get a nicer house.
Yeah. Not only that, like those people that bought a house, but we had a ton of people refinancing these low rates.
Yeah.
And so now they feel like, well, I've refinanced, I have this low rate, I don't want to lose that low rate. And so that being said, what does it mean when interest rates are low like this? I mean, I tell my buyers that with where interest rates are right now, they're almost 2% lower than what we were expecting. That means that they can either buy more house or buy the same house, but for significantly less of a cost out of pocket on a monthly basis.
Absolutely, yeah. So right now, with rates being this low, exactly what you said, allows them to upgrade. The payment might not go up much, or just fits within their budget, and now they're finally in position to do so. Or if they're looking to, just redo the mortgage on it. Or another thing that we don't talk about a lot sometimes is, what about maybe investing in real estate? Maybe a second home.
Yeah.
Maybe you want a lake house. That's, something of that effect can happen right now. And just if you want a rental property, you might be able to go get that for, a good price and a really cheap rate. And cash flow on that and produce some extra cash flow for yourself.
Definitely. Well, guys, throw some questions in here as we go. If you guys have anything, we'll get to those at the end. We'll continue going on here. But rates are ridiculously low. I mean, you had mentioned, upper threes at this point. I saw an email come out yesterday at like 3.375 for a 30-year. I saw some FHA stuff like around 3. I mean, it's a really good time to buy. I know we hear a lot on the agent side that people are waiting to kind of save up more down payments, and we try to tell them, unless you're like saving up significant amounts, it's not worth it to wait, because if you're trying to save up another $5,000 next year, we could be 1% or 2% more. You're really going to end up having to come to the table with just as much, and your monthly payments probably going to be higher, even though you're putting more money into it.
Well, I think sometimes people forget, if rates are going up, then waiting is definitely costly. But appreciation is happening every year.
Yeah.
So the cost of the house is going up regardless of rates. That's costing you more money. Something to think about. For every $10,000 is about $50 a month. Factor that in, it changes your cash flow, changes what your budget is.
Yeah, and I mean, we've been seeing anywhere on the low end 3% a year, on the high end 10% a year, depending on where you're at in Lincoln, of appreciation over the past 5 to 7 years. So, I mean, if you are waiting and you're going to save up an additional 2 or 3% for down payment, the market's just matching you at this point.
Exactly.
So you're literally just matching where it's at. You could get in today, start building your equity, start building wealth in yourself, and get it done ahead of time instead of paying somebody else's payment for them for the next year while you're still scrounging together money. So
and make 2 to 3% on your investment.
Exactly. Every year.
And it's a tax deductible item as well.
Yeah.
I mean, there's a win-win to it.
You can invest anywhere and get the returns that you're getting right now in real estate. There's no question with that.
No question.
Where do we see rates going? So again, I don't know. You told me last year that September 2019, dude, they're going to be at 5.5. Everyone's saying 5.5.
Yep.
Well, I'm calling you a liar right now. They're like almost 3.5.
Yeah.
Where do we see them in 2020, 2021? What's going on?
Yeah, so I've been really paying attention a lot more to this lately because you were seeing just the market push rates down. Fed came out recently, said they're going to do a rate cut. They didn't initiate the rate cut, but it's on the table. We're seeing a lot of money come from globally into our market here in America to buy our bonds. The reason that's happening is in Europe and China and other markets, bond markets at zero. They have negative rates. So they're putting their money here, which at the end of the day, supply and demand, it's pushing our rates down because there's more money coming in.
For us.
I see rates continuing to just gradually trend lower. and it's going to put ourselves in a great position to continue to invest in real estate while you're getting great market appreciation.
Yeah, definitely. And guys, people are all concerned about this bubble that's occurring nationally. Right now, homes have appreciated since the burst that we had, like 10 years ago now. Nationally, appreciation is only at 1% over the last almost 10 years. Here locally, it's closer to 20%. We only depreciated 5% when that whole burst happened, so we're about 25% up over 10 years. Again, that's a real steady pace. Seeing at 3%, which is about what the economy inflates every year.
Right.
We're below that still. So there's really no sign of this bubble or burst. No. Economists, it's just not going to happen. It may slow.
Normalize.
It started to slow and normalize.
Normalize, yeah.
And, as of last year, we actually got back to that break even, and that's why now we're at that 1% over. And so we're just back to where we naturally would have been. So it is going to begin to normalize a little bit more. Yeah. Appreciation will begin to slow, but it's not going to crash or bomb. And again, specifically here in Lincoln, Nebraska, guys, 5% was what happened, is how much home prices depreciated. That's 1 year of appreciation. So if you buy a house right now, you live in it a year, and then we have this big burst, you're still at break even when that burst happens, and then it's just going to start building on itself again. So
I get that question every once in a while too. People go, Greg, I'm a little afraid to buy the home because I hear all this stuff about the recession. And I go, listen, in the greatest recession we've ever seen, or call it maybe the second depression, our market in Omaha went down about 10%, Lincoln 5%. If that's all you have to risk, when you look at it from a risk reward, you should invest in real estate because our market's strong. You're going to make that money back. And you're most likely not going to see a recession right now, so you really don't have much to lose, but you have a lot to gain. Yeah. It's great to invest in real estate. Money's cheap. Houses and prices are going up. It's just a good investment. It really is.
Definitely. With rates low, Greg, I know that, I would love people to just sell their homes, but some people do decide to refinance. There's nothing wrong with that. Do you have any suggestions, tips for people looking to refinance right now?
Yeah, refinancing right now is a hot topic. We're seeing, applications just across the nation go up for refinances. It does create a great opportunity. If you're not in the market to upgrade or whatever it may be, you can refinance right now to lower the rate, which will lower the payment. You can refinance to lower the term. You can refinance to take cash out and invest that money, pay off debt, buy a boat, whatever it makes sense for you to do. But great opportunities in refinancing, and what we tell our clients is give us a call. We can at least look at it. We do a mortgage review, see if it makes sense. If it does, we'll let you know and we'll help you out with that. If it doesn't, at least you know.
Yeah, and don't buy a boat, guys. I'm not a financial advisor, but boats depreciate pretty hard. You should wait to buy a boat until that recession happens. Homes, on the other case, don't depreciate. They appreciate historically, so that's why now's a good time for that. Wait to buy a boat until we do see that huge crash that's not going to happen. But something will happen, but nothing as catastrophic as people are envisioning. Because a lot of people lost a lot of money when that happened in the stock markets and all those types of things. So there's some understanding there of why people are pretty hesitant.
Yeah, right now, what with the refinances, what we're seeing most is debt consolidation.
Yeah,
people are taking their equity, using it to improve cash flow, reduce what they're paying in interest overall, and that cash flow change is positive. And when I tell them when they increase their cash flow, $300, $400, $500, some clients right now $800 a month. If you redirect that money to either increase your budget to buy a bigger home or pay your house off faster, you'd be surprised. Sometimes you can pay your house off in 8, 9, 10 years by not changing your budget whatsoever. Something to think about.
Fun fact, I think someone told me a couple of years ago that if you make an additional payment to principal and interest, or just your principal every year, just one additional payment, so 13 principal payments, it reduces your loan amount by 8 years. So from 30 to 22 years, from that extra $900 a month that you're going to fork out.
Yeah.
But if you do that, make sure to let them know you want it directed toward your principal only and not that interest. So.
Exactly, yes.
And then I guess, what tips do you have for buyers? First time, experienced, fifth time? What do they need to look for? What do they need to get ready if they're going to talk about refinancing or buying a house?
Yeah, I think the biggest thing that we talk about with our clients when we sit down, especially first-time home buyers, but any buyer in general, just setting the right expectations on how the process works. Also, depending on the price point you're in, the expectations of the market's moving fast still. If you're in Omaha right now, we're seeing if you're like 250 or less, it's multiple offer situation. Okay. Be ready to move fast. So prepare yourself for that. Try to keep your emotions out of that until you at least get under contract so you don't get devastated by maybe losing that house. And that's just kind of the process right now. So be prepared. And working with the right lender is important because if we do all the due diligence up front, we say you're pre-approved, or better yet, you're fully underwritten, you know the biggest risk in all this, the financing, is taken care of. The seller appreciates knowing that. The listing agent appreciates knowing that. It allows you to come in as a stronger buyer and be prepared for that, knowing the expectations through the process. That's a big one.
Yeah. Well, you just mentioned, not just the pre-approval or pre-qualification, but actually getting that loan approval by going through underwriting.
Yeah.
If you guys are out there currently shopping around and you don't have a letter that says you guys could close pending an appraisal, then you guys need to ask your lender, hey, I would like my file to go to underwriting now before I find a house. What that does is, as Greg just mentioned, is it strengthens your ability. You can go in and hand them this and say, I'm approved. They've scrutinized every aspect of my finances. I can buy this house. There's no questions about that. All we need is appraisal. It's pretty darn close to making your offer cash, and allows you to literally close in as little as 2 weeks. In a lot of scenarios with that. So if your lender can't do that, they more than likely can, they just don't want to. Give Greg a call. He'd be more than willing to get you guys in the best position possible to get into a house. Again, multiple offers. We're seeing that same thing here in Lincoln, under $250. There's cash offers that do come in, but not on every home. The next best scenario is having that letter that says, I'm fully approved, I'm good to go. That's about as good as cash. That puts you one notch above all those other maybe conventional offers, or even an offer with a larger down payment. So that being said, Greg, I appreciate having you on today, man.
Yeah,
I appreciate
thank you so much.
coming
Appreciate
down.
it.
Again, guys, this is live with Lincoln Select. Greg Acero with Fairway Mortgage. Every other Thursday, 10 a.m. We got any questions on your phone here?
Let's look here.
Open that back up. It's sideways or something in there. No, maybe not. I'll peek up here. No, it doesn't look like it. Well, guys, thanks so much for watching. Again, we'll put Greg will comment on this video with his contact information. But if you guys have any questions, let us know. As Greg had mentioned, education's a big thing. We sit down with every single one of our buyers and sellers and do a consultation to let them know exactly what to expect throughout the entire process of buying and or selling a home. So give us a call. You know how to reach us. Just message us on Facebook if you're on here. So we appreciate it, guys. Greg, thanks for coming, man.
Yeah, appreciate it. Thank you so much.
Guys, go Big Red. Beat Colorado this week. And
Yes.
have a great one. Take care.
Thanks, guys.
All right, how do I do this?